Welcome to the discussion video on Module 13, the continuation of the inventory discussion, specifically on the lower of cost and net realizable value. So, according to the accounting standard, the inventory should be measured at the lower of the cost and net realizable value. GAAP required that the inventory be valued at lesser amount of its laid down cost and the amount which it can likely be sold or its net realizable value. There is no problem when the reflected cost of inventory is always lower than its net realizable value. Kasi kung laging mas mababa yung cost compared to its net realizable value, you don't need to adjust um, in your financial reporting. You don't need to make adjusting entries to reflect the net realizable value because the cost reflected in your financial statement is always lower in your compared to the net realizable value. So the problem arises when the net realizable value becomes lower than the reflected cost in the financial statement. So doon nagkakaroon ng adjustments or the preparation of adjusting entries to be able to reflect the actual cost of disposal of inventory whenever it is disposed at the time you are reporting. So what is the logic on using the lower of cost and net realizable value? The rationale is prudence and conservatism. The principle of prudence and conservatism is the reason why the measurement of the inventory is the lower of the cost and the net realizable value. Hindi pwede na naka-reflect yung inventory mo at a high amount or it is overstated. It is in excess of what the net realizable value is. Kasi kung ang naka-reflect dyan is 1 million wherein in actual practice ay in the actual field, in the market, ay mabibenta mo na lang pala yan at 800,000. So, ibig sabihin, the financial statement is misstated or the inventory is overstated. So, it does not reflect the actual amount it is supposed to be reflecting. So, what is the net realizable value? The net realizable value is the estimated selling price of the goods minus the cost of sale or the disposal. This valuation measurement shall be used in determining the lower of cost or market of on-hand inventory items. The cost of sale as deduction in the estimated selling price or any reasonable cost of completing, transporting, and disposing of inventory or any expenditure incurred by the purchaser in order to place the merchandise in the business and ready for sale. So the cost of sale, the selling price of the goods minus the cost of disposal is the net realizable value. So, bakit natin ina-identify ito? It's because of the concept of the spoilage, obsolescence, and the reduced demand from customers. Pwede kasi na yung inventory na nakareflect sa yung financial statement, pwedeng spoiled na yan, pwedeng sira na yung ibang items dyan, pwedeng obsolete or hindi na siya viable in the market, pwedeng mababa na ang demand yan compared when it is introduced in the introduction phase of the inventory of the product. If any of these were observed and happen in the inventory, the company will have to write off the inventory. The practice of inventory write-down is based upon the view that the inventory should not be recorded higher than the amount the company is expected to gain from them. Yung prudence and conservatism. Hindi pwede na overstated ang yung inventory pero kapag binenta mo is actually you will be selling it at a lower amount. So, yun yung reason kung bakit the inventory should always be measured at the lower of cost or net realizable value or your LCNRV. Accounting for inventory write-down. An inventory write-off is the process of removing inventory that has no value in the general ledger. When the market price of the inventory falls below its cost, accounting requires that the company should reduce the value of the inventory reported. However, if the cost is below its market price, there will be no problem because the increase in the value of the inventory is not recognized. Ito yung sinasabi ko kanina. If the cost is always lower than the market price or the net realizable value, wala tayong magiging problema on your financial statement. So let us take a look on the methods on how we write down our inventory kapag nakita natin that the NRV is lower than the cost reflected in the financial statement. So there are two methods. One is the direct write-off. Next is the allowance method. Under the direct write-off method, nire-recognize natin kaagad on the asset account yung uh, changes on the lower of the cost and the net realizable value. While in the allowance method, nagkikreate tayo nung isang contra asset account. Ang contra asset account na yun is the allowance for inventory write-down. Then, it will be deducted to your inventory at the financial statements. It will be better if we illustrate it. So let us take a look at this illustration. X company with 150,000 worth of inventory found out that 25,000 of it are damaged due to poor storing of the inventory. The company will have to record the loss to reflect the damaged goods. So meron kang 150,000 pero upon careful analysis and evaluation, nalaman na 25,000 are damaged. So ibig sabihin, hindi na yan mabebenta. So the lower of the cost and net realizable value. So 150 minus 25,000 is 125,000 na lang talaga ang realizable value niyan. So under the direct write-off method, you recognize the loss by debit inventory December 31, 2019. So itong entry na ito, this is an ending inventory entry. 125,000 directly to inventory and then credit to income summary. So what is the effect? What is the effect of this entry in inventory December 31, 2019? 125,000. Well, the effect of this is to increase the cost of goods sold. Kapag nag-prepare ka ng, di ba sa cost, how do you compute for your cost of goods sold? The total goods available for sale plus your the beginning plus purchases is your total goods available for sale minus your ending inventory is your cost of goods available for sale. So, since dinadagdagan mo ang yung ending inventory, sinasabi lang dito na ini-increase mo in effect, ini-increase mo ang yung cost of goods sold. So, itinatago yung effect ng inventory write down ay itinatago doon sa cost of goods sold. Ini-increase natin ang ating cost of goods sold because of this write down. However, under the allowance method, we create an account title allowance for inventory write-down. So you debit loss on inventory write-down 25,000 and then credit allowance for inventory write-down 25,000. The allowance for inventory write-down is a deduction to your inventory account. Okay. Under the direct method, okay, may provision. However, if the inventory in 2020 has a net realizable value of 130 and cost of 145,000, the gain on reversal should be recorded as debit inventory 130 and credit 130,000. If in inventory 2020, magkano ba ang inventory? Okay, sabi dito 150,000. Ang inventory found out at 25 for damage. Okay. So, paano daw kapag 130 ang value? So, same logic. 130 ang inventory and 130 income summary under the direct method. Under the allowance method, what is the effect? The cost in 2020, 145,000. Bakit 145? Let's take a look. 150 cost in 2020, 145. Okay, because this is given. The cost of 145. Cost, the gain on reversal. Okay, the cost is 145. The NRV is 130. So required allowance for 2020 is 15,000. Required allowance in 2019 is 15,000. So merong decrease in the allowance for inventory write-down. So anong gagawin mo? You have to eliminate the allowance. So you have to diminish the allowance for inventory write-down. Allowance inventory write-down 10,000 in credit 10 100,000 gain on inventory write-down. So, ino-offset niya lang yung loss and inventory write-downs na generate mo kanina. Okay. The concept of purchase commitments. The purchase commitments are commitments by the buyer to purchase some goods or services at some future date at a fixed price. A business will agree to purchase a commitment in order to fix its prices over a period of time. For example, a business will contract to purchase 100 units of goods at a fixed price of 25 each after 7 months. So, ano sinasabi under the purchase commitments? Because of the changing prices in the market, um, you an entity is entering into an agreement to purchase a particular number of items or inventory to be able to stabilize the prices. So, may possibility na if ikaw ang entity, malamang pinag-aralan mo na in the future ay there is a possibility, probable um, there is a probability that the prices will increase. So, pumapasok ka sa purchase commitment para yung kung magkano yung presyo ngayon, yun na yung magiging presyo when you buy it after a certain period. So, yun yung concept ng purchase commitments. So, let us illustrate this. Paano kapag nagbago yung your expectation ay hindi yun yung na-meet. Pwede kasi na you expect na tumaas yung presyo pero paano kung bumaba? So, ganong mga scenario ang ipapakita sa atin on these purchase commitments because these are still part of the recognition of the inventory accounts. Suppose a business enter into a purchase commitment with the supplier to purchase 100 units of goods with a contract price of 25 each within 6 months. At the year end, none of the product was delivered and the price per unit has fallen into 20. So, bumaba yung presyo to 20. Ine-expect niya na natataas pa yun pero bakit bumaba? Since the purchase commitment is non-cancelable in the business, hindi na niya pwedeng i-cancel daw yung purchase commitment. And the business is contracted to purchase 100 units at a price higher than its market value. So, kumbaga, nagkaroon siya ng loss in this case kasi dapat nag-commit ka at 25 pero at the time na i-deliver na sa'yo ay 20 na lang. So, dapat hindi ka na lang nag-enter into a purchase commitment. So, how do you recognize a purchase commitment loss? Since wala pa daw na-deliver this time, the contracted price is 100 times 25 is 25. Market value now is 100 times 20, that is 2,000. So, meron kang loss na 500 pesos. How do you recognize it? You debit loss on purchase commitments and then credit purchase commitments liability kasi yan ay babayaran. The debit represents the loss recorded in the income statement of the business in the period in which there is a decline in price occurred. The credit represents the liability in the purchase commitments. So let us take a look at further at how this happens. Kasi ang sabi dito, within 6 months, at the year end, the product has delivered since, okay. Suppose that 7 months has passed, the business completes its contract and takes the delivery of the 100 units and adds them to its inventory. However, at the time of the delivery, the price has further declined to 18. So, nag-decline pa ng lalo after 7 months has passed and na-deliver na. The business completes the contract. How do you recognize the entire purchase commitment? So, let us first analyze. The contract price is 100 times 25, that is 25. At the end of the contract, the at the end of the purchase commitment, 100 times 18. 18 ang further decline in yung final figure ng inventory na kanyang bibilin sana under the purchase commitment. So, 1,800. So, what is the difference? 2,500 minus 1,800 is 700 pesos. So, how do you recognize itong effect nito? And nag-recognize ka na ng loss on purchase commitments kanina noong at the year end ay na-recognize na nag-fall into 20 ang iyong price. Since ikaw ay nag-set up na ng loss on purchase commitments na 500 and purchase commitment liability na 500 on the end of that year, you have to adjust it to reflect kung magkano talaga yung kailangan mong bayaran on entering this purchase commitment. So, how do you measure your inventory at the lower of cost and net realizable value? Ano ba ang lower of cost and net realizable value dyan? And in this time, yung 1,800 kasi yun ang talaga ang cost niya. So, inventory, debit inventory, 1,800. Purchase commitments liability is eliminated because this is the end of the contract. So, magkano ang purchase commitment liability mo kanina? 500. So, you have to debit it to eliminate the entry. 500. Loss on purchase commitments. Magkano ba ang loss on purchase commitments? 700. Ito yun. Ang loss on purchase commitments mo ay 700. Pero dahil kanina nag-recognize ka na ng 500 loss on purchase commitments at the end of year of the first year, you have just to adjust it. Mag-add ka lang ng additional 200 for the loss on purchase commitments. Debit loss on purchase commitments, 200. And then, credit mo yung total liability na kailangan mong bayaran, accounts payable, 2,500. That is the contract price. So, related siya dun sa the lower of cost and net realizable value because of the changing prices. Okay, paano naman sir kapag there are gain on the purchase commitment? So, gain on purchase commitment occurs when at the date of the actual purchase or before the actual purchase, the market price of the product increases. So, ito talaga yung ideal scenario. Yung kaya ka nga pumasok sa purchase commitment is because you want to have a gain on the purchase commitments. The company will record a gain. However, if the increase in the product occurred after the decline, the gain to be recorded should be limited to the loss first recorded. So, kung magkano yung unang loss na nai-record mo, if the increase in the prices of the product occurred after the decline, yun lang ang pwede mong i-recognize as gain. Okay. Okay. So I think that ends the discussion on the gain, on the lower of cost and net realizable value. So I hope it helps you while you are studying in this module. Thank you.